In the early hours of the morning, the currency markets were struck by a wave of intense speculation as rumors began circulating about a potential Iraqi dinar rate adjustment scheduled for 9 a.m. local time. The news spread rapidly across investor networks, private chat groups, and trading forums, sparking immediate discussions, heated debates, and in some cases, significant repositioning of capital in anticipation of what some believe could be a historic shift in the region's currency landscape. The level of urgency has been amplified by the fact that this isn't the first time such whispers have emerged, but the timing, market context, and the number of coinciding reports make this instance particularly intriguing. Investors and analysts alike are now watching closely for any official statement from the Central Bank of Iraq, fully aware that the next few hours could set the tone for not only today's trading session but potentially the weeks and months ahead. For months, the Iraqi dinar has been at the center of speculation surrounding a possible revaluation, often referred to in investor circles simply as the RV. While previous rumors have come and gone without tangible confirmation, this morning's chatter feels different to many observers. Market monitors have noted unusual movements in certain regional banking activities over the past 48 hours, with some cross-border transaction settlements reportedly being delayed or rerouted. At the same time, local sources claim that certain commercial banks in Iraq have been unusually quiet in releasing their daily public rate postings, a small but notable detail that seasoned watchers interpret as a potential sign of pending changes. These developments, when combined with broader economic signals from Iraq's recent fiscal adjustments and foreign reserve increases, have fueled speculation that something significant could be in motion. Adding to the tension is the geopolitical backdrop against which these rumors are unfolding. Iraq's government has been making a series of calculated moves to stabilize its currency, strengthen its reserves, and project confidence to international markets. In the past quarter, official reports indicated that Iraq had boosted its foreign currency reserves to levels not seen in nearly a decade, thanks in part to stronger-than-expected oil revenues and improved budget discipline. The central bank has been quietly but steadily introducing digital modernization efforts into the banking system, aimed at reducing illicit currency flows and tightening compliance with international financial standards. These reforms, combined with Iraq's ongoing dialogue with major international financial institutions, have convinced many analysts that a rate adjustment, whether minor or significant, is not a matter of if, but when. What has set today apart, however, is the very specific timing being circulated, 9 a.m. This exact hour has been mentioned repeatedly across different sources, some of which claim to have connections within Iraq's banking sector. Normally, rumors about currency shifts remain vague, lacking concrete timing, but this precision has caught the attention of veteran traders who understand that planned rate announcements, when they occur, are often coordinated for specific windows of the banking day. The idea is that such changes are implemented at the opening of daily interbank settlement windows, allowing for an orderly transition and immediate application across domestic and international payment systems. While there is still no verified confirmation, the persistence of this 9 a.m. reference has created an air of inevitability for those who believe the change is coming. Within Iraq itself, there are mixed signals from the ground. Some citizens have reported that currency exchange shops have either temporarily suspended transactions or are offering noticeably tighter spreads than usual. In a country where even small fluctuations in exchange rates are felt immediately in daily commerce, these subtle shifts have not gone unnoticed. Social media posts from Baghdad and Basra show lines forming outside certain banks, with customers reportedly trying to withdraw or exchange funds before the supposed change takes place. Officially, the central bank has neither confirmed nor denied the rumors, maintaining its usual position of only announcing policy changes through formal press releases. Yet, the silence is doing little to cool the speculation. In fact, it may be adding to the anticipation. Outside Iraq, the reaction has been equally charged. Currency speculators in the Gulf, Europe, and North America are closely tracking live forex feeds, ready to respond to any movement in the dinar's value. Over the past week, trading volumes for dinar-related instruments in certain offshore platforms have shown noticeable upticks, even in the absence of concrete news. Some analysts are warning investors to be cautious, pointing out that previous RV days have passed without significant changes and that the market can sometimes misinterpret unrelated banking delays or procedural adjustments as signs of a revaluation. Others, however, argue that the current confluence of economic, political, and market signals makes this one of the most credible scenarios in years. Part of the reason for the heightened interest lies in the potential magnitude of the change. While no one can predict the exact numbers, speculation ranges from a modest upward adjustment to a dramatic overnight shift that could instantly alter the wealth of dinar holders. A major revaluation would have profound effects on Iraq's economy, potentially boosting purchasing power domestically while increasing the currency's credibility internationally. However, it could also carry risks, particularly if the move is seen as too abrupt or unsupported by broader economic fundamentals. For now, most serious analysts believe that if a change is coming, it is likely to be measured, designed to strengthen the currency's position gradually rather than shock the system. Behind the scenes, international players are also believed to be watching closely. Iraq's trade partners, particularly those in the energy sector, have vested interests in the stability of its currency. A stronger dinar could affect existing contracts, pricing agreements, and settlement procedures. Global oil markets, already sensitive to supply disruptions and geopolitical developments, may react to any confirmed currency shift from a major petroleum-exporting nation. Additionally, Iraq's growing role in regional infrastructure and trade initiatives means that a currency revaluation could have ripple effects far beyond its borders, influencing investment flows and financial strategies across the Middle East. The atmosphere this morning feels almost like the build-up to a central bank interest rate decision in a major economy, a mix of anxiety, hope, and strategic positioning. Traders are scanning every official channel for signs, from the central bank's website updates to televised government briefings. Financial newsrooms have been tasked with maintaining open lines to Baghdad, ready to break the story the moment any confirmation appears. In many ways, the situation underscores the unique position of the Iraqi dinar in the global financial conversation, a currency with relatively low liquidity and limited convertibility, yet capable of generating outsized reactions due to its symbolic and speculative importance. As the clock ticks closer to the rumored hour, markets are showing subtle signs of preemptive movement. Certain regional exchange rates have begun tightening, and short-term currency futures linked to the dinar are seeing increased activity. These are not yet the sweeping moves one might expect from a confirmed revaluation, but they are consistent with the kind of hedging that often precedes high-impact financial events. Investors holding dinar are caught between two competing instincts: the fear of missing out on a sudden windfall and the caution born from years of unfulfilled predictions. Should the rumors prove true, the implications would be immediate. A rate increase, even a small one, would likely be framed by Iraqi officials as a reflection of the country's economic progress and growing stability. It could serve as a confidence boost for domestic and international